Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Great to see you all. We've been doing some filming here in my office. So you see that giant lighting rig there. So getting ready to get some new content and, expand a lot on what we're doing here in Charts and Coffee. So I absolutely appreciate your time. And, probably don't say it enough, but I love the group here, the Caffeinate and Dominate crew. So if I haven't said it, I mean it every day. Thanks so much for tuning in. Love doing this show every morning. We're coming up on, I guess this October will be 2 years of the show. So again, love having you. All right. So you know what? With any further ado, let's get to the questions. I mean, we know what we're dealing with, right? We've got the aftermath of Apple, got the aftermath of Amazon. We've got a little bit of Fed speak here and there. We have a really tricky week where high concentration weighted names are releasing earnings, and this is tail wags the dog season, and no more is it more intense than this week when those heavily weighted stocks have the ability to move the broader averages. That's what high concentration weighting does. That's why the way in which we as traders and investors have to adapt to that reality, the way that we build our watch list, the way that we understand the way the tide and boat analogy works in our lives day to day. So, it's just so concentrated on a week like this. So, all right, let's jump on into the questions. All right, I see them streaming in already. So let's do this. Okay, here, let me get my screen up. All right, there are the questions. All right, Andrew, good morning. For a daily minor low pattern, do we hold the trade until the candle on the close no longer exceeds the previous high? So let's talk about what that pattern is. A minor low, and by the way, we might be forming such a thing in the NASDAQ. It looks like it might be something that's forming. So a minor low, let me grab my drawing tools. For those of you that don't know, I know there's a lot of chart patterns out there. I'm actually not a big fan of chart patterns in regards to head and shoulders or cup and handles or those kind of things. Because at the end of the day, every chart pattern really does have one thing in common, and it's the root of what makes the pattern. Think about the pieces. Let me give you a little advice for everybody, because I'm going to jump into patterns, and I know it's not exactly Andrew's question, but let me make sure I cover this. Never go looking for a head and shoulders, because your brain, wanting to please you, will find one, whether it's really there or not. Look for the neckline. What's a neckline? It's usually just a trend line. If you're looking for a pennant or a triangle or a cup and handle, look for the trend lines. Look for the support and resistance lines. Then step back, because when in doubt, zoom out, right? Step back and say, oh, when I've drawn the support lines, resistance lines, trend lines on this chart, do I then see a pattern that is formed? So never go looking for a pattern. That being said, I'll apply that to my minor low as well. A minor low is basically a lower low surrounded by a higher low on both sides. So the main candle, the most important candle, is that lower low. Then you look back to say, well, if it's a lower low, that means the previous candle had to have had a higher low, and the one that's coming next needs to have a higher low too. Now, it's okay if that candle is also an inside day, right? It's okay if that is it. And the whole idea is that you break the resistance of that lower low candle, which if you're looking for a potential move back higher and a momentum breakout, there's your minor low. It's an amazing pattern. It's an old school pattern. It's a 3 candle, maybe 4 candle pattern if you've got an inside day in there. Now, the more inside days you have, the less you're probably going to see the break of the lower low candle trigger a lot of Momo. But my folks out there who are fans of volume ledges, go see if we have a volume ledge sitting at about 13,580. Let's see if we have a little bit of momentum through the major psychological level of 13.5. So that's the way I look at it. It's a buy stop entry. It's a Momo entry. It's one of the handful of rare momentum entries that I do look for. And I do not wait for the close, right? As soon as we're able to form that pattern, the lower low surrounded by two higher lows, as long as we're able to take out that high of the lower low candle, game on. I do not ever, ever, ever wait for candle closes for my entries. Okay. All right. Thanks for the question, Andrew. Next up, Alan, good morning. Thanks for the whispers. So you all been checking out that whisper number game, right? You've been checking out Estimize. You're realizing it does not matter what the previous quarter said about earnings. The game is with data hot zones and with earnings hot zones, right? The game is, what did we expect and how surprised were we? And was it a positive surprise? Was it a negative surprise? So that's awesome. Now I know why. I love it. I love it, Alan. Awesome. And kudos to you for going and, doing the research, going out and checking it out. I tell all my members when I'm talking in sector secrets and I've got some idea out there, I said, look, just don't take what I'm saying at face value. Go check it out, because all confident traders have this one loop, the cycle in common. They first understand something. I love alliteration, so I gave it all C words. They comprehend something, comprehension. So you understand it. And I don't mean in a way in which Raghee said so. That's not an understanding, right? So you have to comprehend it. Then you confirm it. Okay, I think I see it. Did it work? And you loop around that a couple of times. I think I see it. Did it work? Comprehension, confirmation. Again and again. And then what naturally comes from that is confidence. So most confidence comes from, I saw it, I recognized it, and it worked. And that happens enough. And then you build this bedrock of confidence. So the only way you can do that is if I'm transparent and tell you what I'm doing, and then you go see it for yourself. And so awesome. How much of a rip for a short would we need in the cable in the pound versus US dollar? Great question. I love talking about currencies. So I know a lot of you now, after I explained, hopefully, I think we did this. Did we do this in Charts and Coffee? I can't recall, but I'll cover it real quick again. Currencies are always a contrast. They're always a contrast conversation. And what I'm telling you right now, even Forex traders don't know or do this, not consciously. You will. You look at the US dollar versus something else. You look at the euro versus something else. You want strength versus weakness. You're always looking for that contrast. So in pound, what do we have? What's the driver here? The driver can be both. You can have US dollar and pound weakness. When you've got that, then your Forex pair is firing on both cylinders. By the way, this applies to currencies. This applies to ETFs, everything. So now what we do is we say, what's the main driver? Sometimes it can be both currencies, not always. I'd say the main driver here is US dollar strength. So when we get a bounce, we can short into that. Now, unfortunately, Alan, we need a heck of a bounce, right? The most aggressive thing that I can probably do is pull a Fibbo on this last major move. And notice what I'm doing. I'm using the signals from Darvis 3.0 to just pinpoint where that high and low is. If we can get up into that Fibonacci retracement area, that might be pretty helpful. That might be good for us as a more aggressive, say 50% or the 38.2%. So that's the last major move there. And again, the Darvis signals helps because we've got those little arrows that help as part of the pattern that makes up the Darvis pattern. There's a pattern within the Darvis box, and that's what those arrows identify. So if you have the Darvis 2.0, which by the way is absolutely, I don't even think we ask you for your email. And this is about as frictionless as it gets. Head on over to countdowntrader.com, scroll down a bit, and on the right side, you'll see free downloads. And there are two little links. I think there's a link that reads TradeStation, and the other one that reads Thinkorswim. Click on the Thinkorswim link if you're on Thinkorswim, and it will take you to a box folder, box.com folder. And the Grab and Wave, Propulsion Dots, and the Darvis 2.0 are available for download. Get them on your charts, gang, because all three of those, especially Grab, Wave, and Darvis, they're going to work with everything you're doing. They're going to supplement everything else you're doing. And you're going to get automated support and resistance, and you're going to understand market structure and trend structure so much better with the color-coded candle. So, we make those available for free because at the end of the day, when we're thinking about, what's the needle we want to move for traders, we want you all to have an edge, and we want you all to have that, comprehension, confirmation loop and be really great at this, So check that out. We need a heck of a rip, Alan. So maybe pull a Fibbo and see how that works. All right. Did gold stop us out? Hey there, Rick. Did GLD stop us out? We have our paper cuts. And I know it got close. I know. And this is where I'll have to double check. When I tell you I've been doing filming, we were filming all day long. And when that happens, I actually will ask my husband. I'll give him the numbers and I'll tell him, hey, put the alerts on your phone if those levels reach our paper cut. Now, I think I paid just so I'll give you a little transparency. I think I paid $211 for this, and I think we got down to 150 or below. So yeah, there's definitely a paper cut there. But remember, and I'm not saying that it's something you should still hold, but I know I got emails and I've got a lot to check. So thank you for those of you that have been leaving comments at our show, and those of you, the members who've been emailing me. I got a couple emails about gold, and I will tell you, a couple of folks said that we got really close. But didn't get stopped out. But I do want to give you all this. 25% paper cut. Don't risk more than 3 to 5% of your account. Now, a lot of traders realize, Rob, with the market, and that's just a fraction of the market money math, the position sizing, the budgeting, the affordability process that I teach you all how to do in the mastery, the Sector Secrets Mastery. And so when you know that you're still not risking that non-negotiable level of how much of your account you are willing to risk, a lot of traders say, you know what, if the 25% goes to 28, the wheels aren't falling off the wagon because I'm not pushing those risk of ruin numbers in my account. It may sound a little complicated, but because we use a fixed bet size, we have a pretty good idea of what the worst case scenario is, except for with gaps. Gaps are everybody's worst enemy potentially, including ours. But I think we got close. But I don't believe, I have to ask my husband. That's my husband if we got stopped out. This is where it's really nice. And a couple of you asked, Rog, is he still trading? He comes back and forth into trading. Some of you might have known a few years ago, we did a class. It was actually the Market Money Math class where I taught him the risk management, and he was doing the same kind of trend following that we're doing the mastery. So this class happened before the mastery. And in a lot of ways, what I did with him and the kind of trades that we put on and the kind of position sizing and money management that I taught in that class is really what the Sector Secrets Mastery is. So some of you have said, Rog, whatever did happen? Did he buy that Ducati? That was our thing. He said, is the money that I make mine? I set him up in I think it was a $10,000 or $11,000 account. And there's a desk that you all can't see just behind me. And he was trading with me. And he ultimately tripled the account. But by the time we were 80 days in, and this is a choppy market that he did this in, he had doubled the account. And he said, I can buy that Ducati now. I think he had his eye on an Il Monstro or something for those motorcycle fans out there. And I said, hey, you made the money. This is what, it's okay. If that's what you want to do, that's what you want to do. And so come to find out, he kind of kept quiet. I figured one day he's going to roll up in a red Ducati. And instead, he heads out one morning. And I guess his mom's car had been giving her a little bit of trouble. And he went down to the dealership and bought her a car. And I thought, I told him that day, I said, you're never going to buy anything that will feel as good is handing those keys to your mom. And I know the folks that are mastering, I know a lot of you get it, right? We love this game, but what is it that we're able to do with it? And the only reason I think we can win at this game is we focus on the trends as much as we can. We have very few non-trending symbols in our book of open trades, and we have proper money management. That's the holy grail, gang. In fact, the video that I send out to new members is, hey, here's the holy grail video. This is how you position size and risk according to your account size. So I think it got really close, Rick, but if you got stopped out, we might get another chance to get back in, or we'll just look to other setups. ITB is also on the radar too, Rick. So thank you for mentioning that. I love to be able to talk about money management and how, sometimes you have to take the paper cut, but I want to mention the paper cut with a $2.11 option is about 40 cents. Sorry, it's about 40, it's about 55 cents. That's what we're risking. So really, really important to think risk first and then profit second. Okay, USO thoughts. Sure. So if we're going to look at USO, we've got to go the crude oil route. We've got to go to the crude oil route. And that means we look at the fact that this is a choppy market. Now, I've already got some choppy market trades in my book. So I've got to be really careful about more chop. CL isn't chop, but it definitely still has the bullish bias of the trend that preceded the chop. We're north of the 200 propulsion. We've got gorgeous double Darvis floor, right? Support. And so now what do I do with this? Tim, I want an oversold buy. That's really what I want. Now we have crossed up through the midpoint of the stochastic, so there might be some momentum there, but because it's a neutral yellow market, be really careful about around 109. I'd rather it make a slight pullback and then maybe next week we can get in. So this is not ideally a trend following buy. Now USO looks like a trend, but remember, USO has that 9:30 to 4 p.m. Eastern time that it's open. Crude oil, CL, is going to be where you want to understand the trends and understand the underlying structure. And then you can choose to execute the idea in crude oil futures options, micro crude, or of course the USO. Now, those of you that have been in checking out the Sunday show, 6 p.m. Sunday, Weekly Notes Live, that accompany the weekly notes that I put out for you all on Sunday evening, you know that I'm a little bit more interested in oil stocks. And we know that some of these stocks really took it on the chin last week. It was a tough week for us fans of the commodity and inflation trade. However, then the question becomes, did any of those stocks survive that weakness? And there's a number of them that did. Williams, Valero, Marathon, take a look at those double greens in XLE. Do the same thing in OIH. Do that outperformance scan. And there are some interesting stocks along with that narrative that might be better trades than even the underlying commodity itself. So hope that makes sense. And that's the process that we use. This is the thinking that we use to build that watch list and to focus on the highest probability setups and symbols. All right, next up is with the AMD. So I'm not in AMD, but let's see, what do you got here? Am I concerned with double yellow? So we're not in AMD, PJ. So let's see, am I concerned with double yellow? I don't have a double yellow, PJ. I'm not in AMD, so I'm not quite sure of the question, but this is a double red where we short the rip, my friend. It's a downtrend. It's absolutely a downtrend that we would take advantage of as it rallies into the 21 propulsion, as it rallies up into the wave. As far as getting into some of these metals and by the way, oil services and energy stocks, gang, I'm gonna basically just want to get through this week, right? It's a funny week. It's a major tail wags the dog week. So we want to get through this week, and then I'm going to reassess as the dust settles what we're really working with in terms of trends. So thanks for the awesome questions. All right, let's see. AbbVie, revenue miss. All right, so AbbVie lost its trend, by the way, gang, well in advance of earnings. By basically the 20th, where the trend is clearly transitioning to a neutral. We get our first red grab candle. Not enough to say, it's over, but enough to say the trend is definitely under pressure. But remember, more so than the trend transition, gang, if you haven't read it already, Google this because it's hard to find on countdowntrader.com. Google Countdown Trader earnings window. And I believe the first hit you should get on the Google is my 642 earnings approach. So most of you that are familiar with that know I'm too close to that earnings window. Now in the aftermath, to your point, is there anything to work with? Not really for me, Christian. I'll have to go back in. It's a similar thing with XLE. I'm going to go back into the XLV and ask myself, hey, do I have any trends still working for me here? Merck, Johnson & Johnson, Bristol Myers Squibb. I'd keep an eye on, I'd keep an eye on, I keep it on UNH as well, but you'll see there's 3 names that are really at the top of that outperformance scan. All right, gang. Gosh, that time goes by so quickly. Thank you so much for your time, for your questions, for being a part of the Caffeinate and Dominate crew. Have a wonderful Friday. I remind my traders, gang, Friday kind of hates traders. Don't undo the good works of the week on a Friday. The end of something is always tougher to trade than the beginning of something. The end of the day, the end of the week, the end of a quarter, the end of a year. So be aware of that. I like to remind my traders, Friday hates traders. Be careful with entries. We're going into the weekend, things like that. All right, again, be good to each other. I'll see you Sunday night, 6 p.m. Eastern, for our weekly notes live show right here at the Simpler Trading YouTube channel. All right, be good to each other.